Hi, I'm Kaylee, and I've been a corporate guide with Northwest for 4.5 years. Today, we're going to talk about raising venture capital funds. We'll discuss the basics of applying for venture capital funds and discuss why corporations are the preferred entity type for receiving these funds. Okay, let's talk about venture capital basics. Basically, it's an agreement between young companies and entrepreneurs and venture capital firms. They get funding necessary to get their business off the ground, whereas they get company equity. Now let's talk about how to apply. You'll want to submit a detailed proposal, including a business plan, containing information on your product or service, management structure, marketing strategy, and financial outlook. Now you might be wondering if you need a license to raise venture capital funds. There is no license for this, but you will need to obtain all required business licenses to ensure the company is operating properly. Let's talk about why corporations are preferred. They have a predictable management structure. Corporations must follow specific rules, such as appointing a board of directors and hiring officers. This can allow venture capital investors to have more control. For example, a seat on the board. In many states, corporations are legally required to adopt and adhere to corporate bylaws. Now let's talk about corporate taxation. Corporations are taxed at the corporate level and then at the shareholder level. Dividends are distributed to shareholders, and then investors pay taxes on what they receive. By contrast, LLCs are taxed as pass-through entities, so LLC owners pay taxes on their percentage of ownership in the LLC's profit. Now let's talk about stock possibilities. One of the first advantages is preferred shares. In return for their investment, many venture capital firms want to receive preferred shares, which will give them a priority claim on dividends and distributions. Then we have stock options. The ability to offer stock options to employees and managers can be a powerful recruitment tool, helping to attract talent that will increase the company's chance of success. Then we have stock sales. Selling stock is easier than selling ownership interest, giving venture capitalists the option of easily selling and exiting. So today, we discussed venture capital funding. We talked about the purpose of venture capital firms and what kind of companies they look for, and how to apply for venture capital funding. We also discussed why venture capital firms might prefer dealing with a corporation over an LLC, based on management structure, taxation, and stock possibilities. Thank you for tuning in. If you found this video helpful, give it a like and subscribe to our channel. If you have a topic you'd like us to cover, leave it in the comments. And remember, call Northwest when you want more.